Hello, everyone, and welcome to another episode of the Business Growth Show, where we talk about all components of business and how to utilize them for exponential growth. My name is Athin Cassiotis. I'm a serial entrepreneur, international speaker, results strategist, business coach, mentor, and consultant. Today, I have an awesome guest. He is a Bitcoin economist, investor, and entrepreneur. He has over a decade of experience in crypto, finance, and technology. Welcome, Michael Tozoni, and thank you for being on my show.
Well, thank you for having me. I'm not sure if I'll be able to keep up with your energy because that is a lot of energy, and I'm more of a left brainer, so I'm more of a quiet, meek thinking behind the scenes. But yes, thank you for having me. Very happy to be here.
Yeah, awesome to have you here as well, mate. And I love to start my shows with energy, and we'll
yes,
flow. So I'm sure it's going to be amazing, and a lot of value that you're going to provide for everyone listening today. So you're a very successful entrepreneur. So for those people who don't know who you are, please introduce yourself by telling us about you and your journey.
I'm an ex-Soviet immigrant. My family escaped USSR back when it was still USSR. We came here. We started from pretty much nothing to scratch, and I ended up building myself up. Initially, I was into the whole tech when it was starting out. Actually, in a lot of cases, I was very curious about new technologies. So I was in computers and IT and internet before that even became really a popular thing. And then once I found out about Bitcoin, I kind of moved up to that as well. And with regards to my entrepreneurship and business stuff, I just looked for things, took big risks, researched a lot, learned a lot, and built myself up from pretty much nothing. I mean, my family came here with $300 in our pockets, and then when I moved out, I was basically entirely on my own as well. So it was a long journey. It was IT at first, and I figured out that I actually had a lot of interest in finance, so I decided to learn more about that. Went professionally with regards to learning about it, where I went to college, got some degrees and stuff in economics as well. And around that same time, when I was working my master's in econ, is when I found out about Bitcoin. And Bitcoin is one of those technologies that kind of merges economics and technology together. Actually, it's economics, technology, and business, and there's a big difference between economics and business, by the way. I was actually interested in something called seasteading, or experimental government systems, where people set up small governments and try out different, you can have companies that compete with trying to figure out how to provide services, and they compete against each other. The idea with seasteading that I was looking at back then was micro governments competing with trying to provide services or how they would operate. And this would be done on ships or offshore because there's no land available. But one of the questions they had a problem solving was how do we establish an independent version of money at the time. So that's about when I found out about Bitcoin. And since I have a background in economics and finance and business and tech at the time, I started digging into that. And it was something that really interested me. And since then, for the last 10 years now, I've been pretty much working in Bitcoin almost exclusively. It's been my career.
Yeah, awesome. I love all of that. And I love how you mentioned the three elements about economics, finance, and business and everything like that, how they all go together. And, there's a lot of awesome knowledge there, and understanding, how different things play is how we can really make better decisions. And I understand many of those factors with my MBA that I've done, but I'm sure you're going to enlighten us even more in how they all, fit together today as well. So, if we start from the beginning, right, and let's say, some of our listeners may not really know much about Bitcoin, and if they want to, to begin investing in Bitcoin for the first time, what is the best and safest method to do this?
Well, first, with regards to anything, I would recommend that you don't invest in things you do not understand. So first thing I would do is recommend that you actually research Bitcoin and figure out what it is. It's a bit of a different, I guess, with Bitcoin in the sense that we invest in the stock market, we invest in currencies, but a lot of us do that without understanding how how the Federal Reserve or the central bank actually manages or issues currencies, and we don't understand how the central clearinghouses actually balance all the stock shares in the background, where we just buy from a brokerage and sell, and that's it. We look at the businesses themselves. So in that sense, I would at least understand what the basics of Bitcoin are. You don't have to dig deep into it. I would recommend investing in it just because of if you learn about what the goal of Bitcoin is, which I might talk about a little bit later, you'll understand why it's a good investment. And then once you figure that out, then you should hopefully have enough knowledge not to hurt yourself with like buying Bitcoin and having them stolen or scammed or something like that. My personal, and I don't generally make endorsements because like I don't get paid by anybody, first of all, for endorsing, but I do recommend certain services that I actually personally trust. One of them is called Edge Wallet, which is an app that you can buy, sorry, not buy. It's an app that you install on your phone. Keeping your Bitcoin on your own phone or on your own person, or like not someplace that are third party, is a good idea. So what I typically recommend, you download an app called Edge Wallet, and once you install it and set it up, there's actually ways to be able to buy and sell Bitcoin directly from the app. That's the easiest way to get into it. Like if you just want to take my word for like it's a good investment and just buy some, just go that way. The nice thing about Edge though is they have services that are all over the world. Usually people recommend you go to this company or that company to buy it, but like if I'm in America, so I would recommend this service, but you guys are in Australia, so that service might not be available. Edge is nice because it has services based on your actual country of origin that you select when you install it.
Yeah, awesome. No, that's great knowledge there. And I think that there's so many different companies and apps and things out there. It's like you don't know, what it is. And I think I've heard a lot of stories, like you mentioned, about scamming, right? Of people. It's like, I sent money to someone and, the money's gone or the thing's gone and things like that. So I guess like one method would be to obviously use this app that you've just mentioned. But if there's something else that pops up or anything that they may think is a potential good, investment or opportunity, how can people sort of mitigate those risks of Bitcoin scams?
Well, first of all, if somebody asks you to send them money, treat it like you would treat any other money. If somebody pops up online and says, hey, send me $5,000, I'm going to put it in this investment, just because it's Bitcoin doesn't mean it's different from any other investment. Don't send your money to strangers. With Bitcoin, it's an especially bigger risk because Bitcoin is like cash, where if you wire or do a bank transfer to somebody, you can kind of maybe sometimes get that money back. With Bitcoin, it's like cash, where you give it to somebody and never see him again. You'll never be able to get it back later. With regards to how do you mitigate investments, it's same rules as for any business. Figure out how does this business make money? Where's this money coming from? And that's pretty much it. I mean, analyze every investment like you would analyze any other kind of investment. Bitcoin isn't special or different in that case.
Yeah, definitely. Really great points there. I love that. And I guess, like you said, it's like cash, and my understanding is it's untraceable, right? And I'm not sure if this is correct or not, or do we need to perform certain steps to ensure, that we remain anonymous in these transactions?
For now, it's called pseudonymous because all Bitcoins are held in numbered accounts, but there's no direct thing linking your name to an account, kind of. So for example, if you were to buy Bitcoin from an exchange, you have to provide your information because they require financial information. It's all financial regulations. So when they send you Bitcoin to your Bitcoin address, at that point, they know that this Bitcoin address, the exchange knows that this Bitcoin address is linked to you directly. So if they were subpoenaed for private information, then they would release that this address belongs to this person. However, the way Bitcoin works is every time you spend it, what you do is you spend the entire balance of your numbered account to new addresses. And at that point, One of the addresses, like for example, if I were to send you money, I would create one address for myself and you would give me the other address. And then I would spend all of my money from my old address to these two new addresses. Let's say I have $100, I need to send you 10. I would send $10 to your address and $90 back to myself to my new address. And that way, anybody looking at this transaction publicly, all they'll see is from my address that they know is mine, there was a transfer to two different other addresses. But there's no way for them to actually know which one goes back to you and which one goes back to me. So in that case, and all wallets do that at this point. So in that instance, the more you spend after you kind of get into the Bitcoin system, the more anonymous your Bitcoin becomes. There's still ways to track it. Like, for example, if after all these transactions where I have like addresses are splitting, and then I send one of the addresses back to the exchange again that's linked to my name once again, they'll know that this is the beginning of the chain, this is the end of the chain, and they'll be able to track all the chains between them to belong to me, and I'll know that all these transactions were done by me. And that's the situation right now. There are tools that allow you to mix your coins. The way that works is, imagine a bunch of us needed to pay, like you needed to pay somebody and I needed to pay somebody, and we come together, we take all our cash and we just dump it on the table. So there's a big pile of cash on the table, and then whoever needs to get paid pulls out their money from that pile, and then we pull out the money that is owed back to us. At that point, there's a lot of people putting cash in the pile, a lot of people pulling cash out of the pile, and there's no actual way to trace whose money went to who. So there are services that do that right now. One of them is called Wasabi Wallet, like the wasabi, the Japanese horseradish. And right now they are at the level where you can, if you have a bunch of coins, you can just mix them up between different people. Pretty soon they'll come out with a way where, like when you do transactions, it's just done in the background. The goal is to make it all completely anonymous in the background. Excuse me. Another solution is once Bitcoin, the second layer of Bitcoin, which is called Lightning Network, develops, which will be a more direct person-to-person payments, or rather, it's a more complex thing, but with Lightning, it's kind of the payments bounce through people as opposed to directly. Those bounces, they'll work in the same way that another anonymizing service called Tor Network works, where every person receiving a payment and sending the payment on knows who they received it from and who is going to, but they don't know who they received it from and who's going to as well. So in the long term, long story short, right now, Bitcoin is not very anonymous unless you are very careful and specifically try to stay anonymous. In the long run, it will be, the goal is to make it anonymous.
Yeah, interesting. It's interesting that there's so many different ways of doing it now, and you know, and I think it's enlightening that there's other ways and just instead of using certain standard banking systems.
Want to add one way to think about it. So we know that file sharing, like downloading music and movies and stuff, it's not legal to do so. And for a while, music industry was pursuing people who are downloading music illegally, but they stopped because the cost of actually trying to pursue and actually track down and find these people was way, way, way more than what they would actually be able to get out of finding somebody. So, for example, RIAA, which is the Recording Industry Association of America, they tracked down somebody, spent a lot of money to track a music downloader, figured they could sue him, get some money back. Turned out to be it was an old grandma who was just downloading some music because her son showed her how to do that. And they spent tens of thousands or hundreds of thousands of dollars to find somebody who had maybe $3,000 that they could even afford. That's kind of the goal with crypto. It's not to completely anonymize everything, not to completely decentralize, but specifically make it so that avoiding the issue you're trying to avoid is much cheaper than to actually pursue it. Kind of like, because passwords, when you have a password on an encryption, it works exponentially. So, you know, like 2, 4, 8, and like 64, and just keeps going up. if you have an 8-character password and somebody spends, let's say, $1,000 to crack that 8-character password, you can fix the problem by making it a 9-character password, where it's just a tiny little increase in cost for you. But at this point, instead of it costing 1,000, it'll be closer to like 50,000 to crack that password. And that's kind of how the battle between Bitcoin and I guess everything else is working. That makes sense.
Very interesting. I like that that analogy there. It definitely keeps it a bit more simple for people that are still early on in the journey of understanding it. So thanks for all those points. And I guess there's been a lot of fluctuations, right, recently. Like it's there was the big one a while ago. It went up to 20,000 and dropped again, and now more recently it's starting to get closer to that amount again, and it's sort of fluctuating a bit still, and it's quite volatile. So what factors can contribute to Bitcoin price fluctuations?
Well, I'm assuming your audience knows about investing in stocks, and they know the concepts of big cap, mid cap, small cap, like market cap of stocks. So you understand that if a stock company is really big and you were to buy, let's say, $1 million worth of stock, it's not really going to move the price much. Where if it's a startup and you buy $1 million worth of stock, it's going to move a lot. It's the same concept here. The amount of Bitcoin is fixed. So Bitcoin has a market cap just like stocks do. So the more adoption happens, the bigger the market cap of Bitcoin becomes, and the harder it is for people to move the price by buying large chunks or by having a lot of people buy them. But this growth where it goes up, and it's actually the last time that you mentioned where it went up to 20,000, I think that was number 3 or 4 that it did this kind of a bubble. Before then, it went up to 100 and then crashed. Before then, it went up to 30 and then crashed. I think before then, it went up to a few cents and then crashed. Excuse me. A bit of a dry air here. But that's really just the way that new technology adoption kind of works, especially the one that is, I wouldn't say unregulated, but more exposed. Like if you were to, so one kind of a eye-opening experience with regards to investing in Bitcoin and then looking at kind of getting up there in my, I guess, achievement and contacts and looking at other investments out there is that if you were to look at companies like Twitter or Facebook or other companies like that, you would see some similar kind of stuff going in there as well. Specifically, you would see that Twitter would start out kind of low and it would have a little bit of adoption in the stock value and then crash and then go up a little bit and crash. And then eventually there's this major adoption and it would just spike right up. And then once it kind of stabilizes, it kind of does this kind of an S curve. And then it starts growing a little bit lower because at this point it got adoption. And that's the point where regulators come in, SEC, and says, okay, this is the point where you are allowed to have a public IPO, public offering. This is the point where people are able to buy. So the only thing that people are able to, normal people actually see in stocks is the slow 10, 15% kind of constant rise in stock markets. They don't see any of this stuff because it's illegal for anybody to see this stuff unless you're a accredited investor with a lot of money. So because of that, people get a misconception looking at Bitcoin that it's going up and doing something different when in fact a lot of other companies do the exact same thing. It's just that because Bitcoin can't be regulated, everybody suddenly saw what goes on in the background that actually happens in all these other companies as well. As regards to the actual bubbles, it's kind of like what happened with 2008 housing boom. I think Bernanke or Krugman had a good explanation term for it. He called it irrational exuberance. We also call it FOMO, fear of missing out, where as you might know, everything has kind of like, including Bitcoin, an established market where there's a certain amount of it being bought and sold. But then investors come in and see that it's going up and they're like, oh, I don't want to miss out. This looks good. So they just buy it for the sake of buying it, which causes the price to go up. And the market might be here, but the price goes up there. And then eventually people realize, oh, there's not actually a market to support it. So some people sell, the price goes down a little bit. People who don't understand it are only in it for investments, freak out and sell it. And it crashes down a little below the market and then stabilizes and stays at the market. And that's kind of what's been happening in Bitcoin, that Every time there's a major adoption for whatever reason, usually because some country's currency fails, or because inflation and Bitcoin gets cut in half, or some other kind of a trigger, Bitcoin value jumps up. People who don't understand what it's actually for and only look at it for the sake of just making money buy into it. Irrational exuberance, fear of missing out kicks in, the price goes way up, and then it comes back down to the new market level. And the people who do actually understand what it's for and what it's used for, they typically don't sell. They just ride out the waves because they know they're just going to keep going up.
Yeah, and I think that's the biggest thing. Like I know I looked into a little bit of forex type trading, which is sort of similar, I guess, to Bitcoin, right? Where there's a lot of volatility in the market, and if you're going to trade it, it's very short term, right? And you got to really study it and everything like that. And then there's a lot of risk still there, right? But you've got to make sure you know what you're doing and study that for a while. Otherwise, if you're smarter, then you know that realistically over the long term it's a better investment, and that's an easier thing to sort of get it in at a good price and then allow it to appreciate over time as well.
Well, you got to remember that the goal of Bitcoin is to replace global currencies. That's what everybody's working on doing, and the only way to get up to replacing global currencies is to grow. I mean, people complain about volatility and how things are, the prices are not stable, but if a price is stable, that means that you already reached equilibrium, you're not growing. So as investors, we actually look for things that are volatile because we want growth. Volatility means that there's still growth. So we're still very early in Bitcoin, obviously, because it's very few people even use it to buy things, let alone actually replacing currencies. So over time, obviously, as more people adopt and switch over it, it will grow because there's only so much of it to go around to everybody. It's a fixed quantity of Bitcoin to share among everybody.
Yeah, really great points. And like, I guess following on from that point you made, like I know that some businesses have started allowing Bitcoin for payments. So I guess where do you see this trend going in terms of allowing the alternative markets in standard business?
Well, Bitcoin has a lot of benefits compared to banks with regards to payments. Excuse me. There have been companies for at least 7 years that would provide a service where they would accept Bitcoin on your behalf, then instantly convert Bitcoin to cash and then deposit that money into your bank. Right now, one of the bigger news was that PayPal started allowing people to buy Bitcoin. The rumors that Bitcoin, I don't know if it's confirmed yet or not, it might be confirmed. The rumors that anybody who uses payments to PayPal to accept payments, PayPal will allow them to do the same thing where they'll be able to accept cryptocurrency as well. And then probably provide the same kind of service where they'll be converting your cryptocurrency, your Bitcoin, into dollars or whatever else you're using, and depositing it to your bank or allowing you to keep Bitcoin possibly. So I kind of see that happening more and more of. As I mentioned, there's a lot of benefits to receiving payments in Bitcoin. For one, it settles almost instantly compared to, well, I mean, it's like an hour or two, but that's almost instantly compared to everything else. So if you think about it, you accept a credit card payment, you have, usually it takes a couple of days for your credit card payment to come into your bank. And then even once that happens, there's still about 6 months where somebody can pull that money out if they decide to complain or something like that. If you have a bank transfer, in US, bank transfers usually take about 2 to 3 days. In some countries are more instant, wire transfers are more instant, but those instant transfers are not technically instant. What happens is that the banks agree to hold the loan or debt on one side and deposit it on the other side. So the money doesn't actually move from one bank to the other. One bank just extends you a loan for this amount of money, assuming that they're going to get it from the other bank. With Bitcoin, it's like giving cash. You just give it directly. One of my friends runs and actually worked for a similar company to his. This is primarily in IT companies, is really useful. we have employees that work all around the world, so we can hire people from like Ukraine, from Spain, from Germany, China, India, South America, and all of them work remotely. But then if you wanted to pay them using standard traditional banking methods, it would take quite a bit of work to figure out how to do that. Bitcoin, it's like email. You just create one transaction, everybody gets paid instantly. It doesn't matter where they are. And then once they're done paying, they just can, I mean, once they receive their money, they can convert it to their local currencies, or they can just spend it directly. So yeah, over regular payments, it's instant. It is actually still cheaper compared to all the fees that you have to pay. Like Visa charges like 3% sometimes up for some places. In some smaller islands like Aruba, I think they were threatening to raise fees up to like 7% per transaction or something like that. So cheaper, more instant, more secure. It's more final. There's finality in getting Bitcoin. And it's also a lot easier to pay larger amounts. Like one of my friends runs a business where he would buy computer equipment from China and ship it over to US. And he eventually switched to paying with Bitcoin because paying like $200,000, $300,000, or $500,000 payments to China would take a lot of confirmations and transactions and conversions and having to go through the bank to do the wiring, whereas with Bitcoin, they would just get the payment no matter how big it is, if it's millions, within like 10 to 20 minutes. So it's like, I mean, yeah, one good way to think about Bitcoin is kind of like how you would think about the old post office system, which is how our banking works, where it's still mostly manual. All your transactions, somebody in the background has to verify and get the money over and do that stuff, compared to email, which is global, doesn't care about borders, and just works automatically and instantly.
Yeah, I like that analogy. That's really awesome. And yeah, very interesting to see what PayPal is doing as well with that thing. And I guess something that just came to mind as well, that was more recent and probably the first mover in that market, was Facebook with Libra, right? With their currency. And I know there's been a lot of big controversy, especially I know in Australia, where they're not really allowing it. And a lot of the global financial systems are sort of a bit funny about that. So what are your thoughts on that?
So I know a funny story behind Libra. Have you ever seen the movie The Social Network?
Yes.
So you remember that Winklevoss twins, they invented Facebook, and then Zuckerberg supposedly stole it. Well, many years ago, Winklevoss twins actually got into Bitcoin. They bought $5 million worth of Bitcoin at the time, which a lot of people call them idiots for doing that, but their 5 million is probably worth about, I don't know, maybe 500 million, maybe more at this point. But Winklevoss brothers, they started a service called Gemini, which is a Bitcoin exchange. They actually, I think they're the ones behind Coinbase at this point. I'm not sure. But anyway, Gemini is a massive cryptocurrency exchange. And Gemini was working on creating a stable coin, which is a dollar or a basket of currencies backed cryptocurrency that they were going to call Gemini Coin, because that's their company name. And that's around when Mark Zuckerberg came up with his idea of Libra Coin. So if you're wondering why Libra is called Libra, which is one of the astrological signs, it's specifically to kind of stick it to the Winklevoss twins. So we have these two massive billionaires, massive companies, and with all this money and power, and yet they're still trolling each other, trying to take over and make fun of each other with these stupid names. So yeah, with regards to Libra Coin, there's issues there, but I mean, for one, the whole point of concept of Bitcoin and cryptocurrencies is that there's no third-party trust. So if you have a dollar, you have to trust the government that issues it. If you have money in the bank, you have to trust the bank that is holding that money for you. If you have Libra Coin or Gemini Coin, you have to trust both the currency that's underlying the coin itself and the company that's issuing those stable coins. Because if the company Facebook fails, then Libra Coin becomes worthless. if you hold Bitcoin, you don't have to trust anybody. You don't have to trust the issuer. You don't have to trust a third party because you're actually holding this money yourself. But that was the big problem that Bitcoin was invented to solve. And it was created after the 2008 housing bubble when banks started issuing all this currency. The solution that it was trying to solve was not having to trust banks just printing a bunch of money, or governments, not having to trust banks that can fail. You are in control of your money, like you're the bank. Which obviously, if a central company starts issuing a coin backed by government currency, then the entire solution just disappears.
Yeah. Yeah, that's really amazing points there. I like the way you put that analogy on what it's based on, and yeah, I guess not giving the control or mitigating the risk, so to speak, on certain other platforms, and being able to really be the master of your destiny in that area there. So it's an interesting space to see, but yeah, definitely keep that open. So I guess you've been talking initially like a lot about business, right? And so is there a way that we can get involved in starting businesses within the Bitcoin industry?
Yeah, definitely. Yes, and it'll be risky, and it can be potentially very rewarding, because I would look at starting business in Bitcoin as starting business in internet back in, let's say, 1994, maybe we're 95 levels right now. It's still very much a very new industry, still very Wild West kind of thing. There's still a lot of unknowns, there's still a lot of risks, but at the same time, this is not a fad. This is kind of like converting, like I mentioned, post office to email, or maybe landline telephones to internet. Bitcoin kind of does the same thing, where it's this new decentralized open source platform. You have an MBA, so you probably know what the concepts like an open source platform versus product. So a platform is something anybody can build on, versus a product which is just run by a company and totally controlled. And open source network versus a closed source network. So that would be, a closed source would be your telephone landline companies, versus internet that anybody can expand and build on, where we had 70 years of innovation in our telephones, whereas we had cordless phones and fax machines, versus 20 years in internet that is open, where we have what we have now. And obviously network effects, where you have, the more people use it, the more valuable it becomes. It's the same deal with the Bitcoin is basically the open source platform for finance, and not just finance, it's also contracts and other things that can be built into Bitcoin. So if you're building in a Bitcoin ecosystem, you are effectively one of the first pioneers building these platforms that will either destroy older technologies and older companies like fax machines did, internet to fax machines, or force them to change, like our cable companies eventually ended up becoming internet providers, because or we had cable companies that would provide you with shows, and right now it's more like Netflix and internet services providing all those things. Nice benefit of automation, my home turns on lights to a certain brightness at a certain time. So yeah, if you're going to be developing in Bitcoin, the first thing I would suggest is obviously learn what Bitcoin is. It's not, how do I put this? I say gently. It's not like just money, but something else. It's an entirely different concept of money, where it's supposed to be empowering people to do things. Basically, you're not, if you want to get involved in Bitcoin, it's kind of like if you want to get involved in the internet, you shouldn't be looking into how to make better cordless phones or faster fax machines. It's a totally new kind of environment out there. Kind of one neat example that to kind of blow mind of what Bitcoin can do. We have Uber, that everybody knows what that is. So you pay for somebody to drive you. We have self-driving cars, where you get into a car and it drives you. Now imagine if you were to take a self-driving car and Uber and add the first technologies that allows software to own its own money. So right now, if you wanted to write software that manages money, you have to go and open a bank account in your own name and program that software to send money back and forth in somebody else's name. It all has to be done through some bank someplace else. Bitcoin is just code. So Bitcoin can exist within software. That means a software can just actually own the money and make its own decisions of how it can spend and receive it. So if you were to take Uber and a self-driving car and add Bitcoin to it, you can have a car that owns its own money, owns itself, learns how to drive, earns money by transporting people, and then it can even make pay itself to like mechanics to fix a car, pay researchers on how to, let's say, make the car a little better, and basically can exist as its own thing. We call it an autonomous entity. This has never existed in Bitcoin. Before Bitcoin was invented, because it was simply not possible. And these kind of like big concepts, like we have when we came out with internet back in early 90s, at most we can think of like, well, we can send messages to each other. We never thought of inventions like you can take a mapping application, a GPS location, and come up with Google Maps. Or like Uber was not something we would have even ever been able to imagine back in 1990s, because like that the technology was there, but the idea just was not really there because it's just too big and too out there. And it's the same deal with Bitcoin. So we are very early in this space. It's a very kind of a pioneering kind of environment, but there are very huge opportunities that might happen, that could happen in it, that we just simply have not even thought of. But anybody who comes up with them and kind of takes these things and puts them together can be the next kind of Uber, the next Facebook, the next whatever, but within the financial and contractual space. I mentioned contracts because Bitcoin isn't just sending money back and forth. The way that money transactions happen is there's a contract that is written in every transaction that says, I want to transfer money from account A to account B, signed by so-and-so, and it's just a very basic contract that like I'm transferring money from here to there. On Bitcoin, you can write transactions that even say something like, this is a transaction that needs to have a certain number of inputs, in other words, deposits, by a certain time period. And if those two conditions if those conditions happen or satisfied, then this transaction becomes valid, or contract becomes valid, and this transaction executes and sends money to some different account. If this amount of money does not happen by a certain amount of time, then the transaction fails, and just everybody who sent money into that transaction just gets their money back. It gets unlocked, the transaction is invalid, so the money is back. And what I just described is basically Kickstarter. So there's a company called Kickstarter that does that for you, but you can set up a transaction in Bitcoin where there's no company that is involved, and you don't have to trust sending money to anybody. You don't have to trust anybody holding money in escrow. It just happens automatically within Bitcoin. And then based on that, you can make more and more and more complex contracts, I guess, with regards to how money gets sent, even to the point where you can eliminate quite a lot of a lot of legal firms. What they do is basically set up contracts of how money should be sent, how transactions should be settled, how values should be distributed. A lot of that can actually be programmed within Bitcoin itself. So there's a lot of things that Bitcoin makes obsolete. Banks, central banks, legal firms. It's just that you have to figure out and understand what Bitcoin actually does in order to kind of understand where you can start your business into, and also understand the ethos of Bitcoin, which is effectively removing having to trust third parties, kind of minimizing where you're dependent on somebody else, kind of like with internet. I guess the closest I can think of is a mesh network, where instead of having to rely on a third party like an internet service provider to provide you internet, now you can rely on just Wi-Fi that's distributed everywhere, kind of wherever you need it, it's available, that kind of stuff.
Yeah.
So,
Yeah.
sorry, that was a lot to drop, but
No, that was awesome. I'm sure I'm going to listen to that again, and I implore everybody that listen to that. And it, I think what you've just done there is you've opened up the opportunities to people, right? And that's what business is all about. And understanding Bitcoin, it's not just I want to send money from you to you. It's like how different ways of sending money, being open source. How can we integrate this? And this is where you talk about being an entrepreneur and everything like that. How we integrate this into other things so that we can really create something bigger. And, one of the platforms that I know a lot of people use that sort of, I think has taken over PayPal a lot in business is Stripe, right? Because it helps with a lot of, global currencies. It's a little bit more flexible than what PayPal is. But this almost seems like, it's another level to Stripe, right? Because it has, that different area of being able to transfer money, but then, not being, dependent on that system, and then also opening yourself up to being able to do more things at the same time.
well, if you think about it, the only reason we even have companies like Stripe and Visa and other stuff is because we have these dollars that sit someplace and we need a third party to move the money from one location to the other. If I'm paying somebody through Stripe, the only reason I'm using Stripe is because I have dollars that are locked in my bank account and I have to use Stripe as an intermediary to send it to somebody else. Bitcoin bypasses that completely, where I just send it directly.
Yeah.
So if Bitcoin does become more widely used, actually accepted directly, then companies like Stripe and PayPal will basically go out of business. They won't have any reason to exist. The only banking services that banks would still be able to provide would be providing security, managing accounting, managing wealth, possibly managing investments and loans. Other than that, most of the job of banking, which is just moving money, just becomes obsoleted because we can just move money directly between each other.
Yeah. And it's probably the reason why PayPal and Facebook and these other people are creating their own, blockchain type coins to be able to try and get people not to technically use Bitcoin and get them onto their platform so they can still become relevant and get the business. But then, then it has the cons, I guess, of that aspect. Whereas I think, like you said, when people awaken themselves of the control that has on them, that they can really get a lot more from Bitcoin.
Honestly, I think there's only two reasons they're doing that. One is that Bitcoin, they look at it as right now it's a popular fad, so they're hoping to cash in on people using it. Early on, there's been a lot of companies, and kind of still are, that are blockchain. So if you have a company that, I don't know, sells collectibles, nobody will invest in you. As soon as you say, we sell collectibles using blockchain to track the collectibles, all of a sudden people are throwing money at you. So those digital currencies, in a way, they're a way for companies to kind of cash in on this while they still can temporarily. And the other reason a lot of them are doing it is simply because there's still a lot of these companies just do not understand what it is. We've actually had many instances where big banks, I'm not going to name names, but big banks actually invested in blockchain development and trying to start their own cryptocurrencies and trying to use blockchains to kind of track their own internal things, simply because they have no idea what a blockchain is. And the way I could describe it as easiest is a blockchain is a collection of people a distributed group of people using Excel spreadsheets is how I would say it. It's basically a database. All it is a database, and the only reason that so here's what the solution it does. So everybody knows that Bitcoin, we may have mentioned, or I know people know mining. There's Bitcoin mining, and it's extremely wasteful. And Bitcoin itself is extremely wasteful because what it is it's a database of all the transactions that happened that a whole lot of people own copies of. So if you wanted to run a business and optimize things, you don't want to have a lot of people run databases, like multiple copies of the database, because you're wasting space. You'd rather have one database if you're running a business if you're issuing stocks, for example, or if you're issuing currencies like Facebook would be, uh, the easiest way to do that is to just have Facebook run a single database, and then everybody who wants to use Facebook's currency, they would just connect directly to Facebook, do all the transactions on their single database, and that's it. Because if you think about it, if Facebook creates a decentralized coin, but Facebook goes out of business, that coin is not worth anything anyway. So why have all these databases? And the whole reason that Bitcoin does have all these databases is because it decentralizes the trust. So I use Bitcoin and you use Bitcoin, and I don't have to trust you because I have a copy of the entire Bitcoin database. So if you send me any kind of money, I can verify on my own database to see that that money is actually legitimate and actually exists, and that you have it. That's the whole point of having all these databases and redundancies, is so you don't trust somebody. And that's also unfortunately why it has to be wasteful the way it is right now. So all these businesses like banks and Facebook and stuff trying to create their own currencies, and they're looking into blockchain, they're completely missing out the whole purpose of blockchain, where all their businesses would be a lot more cheaper and efficient and be just as good if they simply ran a single database. But because they don't understand the whole concept of everybody having copies and verifying against each other, and that's, by the way, why Bitcoin cannot be counterfeited, is because everybody has a copy of the database and everybody verifies each other's transactions. They don't understand that, so they think, oh, blockchain, and they implement this and don't quite get what the whole point is. I hope that was understandable. One of my problems is that I've been in this for 10 years at this point, so all these concepts I've been in for a long time. For new people, it's still kind of hard to understand, so I may say something that is like, has 10 years of experience behind it, where somebody else is like does not. So if that happens, please feel free to ask questions.
Yeah, no, I think it's really awesome, right? Like, we've probably got people here, like I said, that have never invested in Bitcoin before. Some people that have probably owned some and haven't done much with it. Some people have probably traded a little bit and maybe lost some, and maybe made some with the thing. And a lot of people probably want to learn more. And I think that's the great thing about today, is that you're opening up people's eyes about understanding it. And I like the detail that you're going into, because something's going to peek out to somebody, right? Whether it's the whole, interview, but there might be like 2 or 3 things going, oh, that was interesting, like how you can put it into businesses and create like the Uber and the, the driverless cars, or maybe it's about the databases, maybe it's this. And then, when we get curious and we start to, analyze things and go down those paths, that's when, they're like the good rabbit holes. I like to talk about it. It's like you get that in and then you're like, okay, let me do it. And then I guess, at the same time, it's, finding people like yourself, Michael, where, you are like the expert, basically, right? You've been doing this for over 10 years, where a lot of people don't have much experience. And it's like, seeking out to somebody like you and saying, okay, well, maybe, can I have help with this or something like that? And, there's an effort, obviously, that you can potentially do that depending on, what services you provide and stuff like that as well, right? Because I think in anything, in business, we need to learn things from someone, right? And there's you can learn it from doing degrees, like we've done that, or you can learn it from actual people like in the field, right? That have already done the work, that have done the the thing on top of that, and that's like coaches and mentors and things like that, right? So, and that's where
economics and business are 2 different things, because one is people are theoretical, the other is people actually doing it.
Yeah. And that's the other interesting part is about economics, is how everything works together with supply and demand and everything like that. There's a lot of different factors, and it's definitely a complex industry. I didn't enjoy much the financial modeling subject when I did my MBA, but it was necessary for me to do it. Right, everyone's different, right? You're more the left brainer that likes that type of stuff, and that's why. If I was to do those types of modeling things, I would come to somebody like you and say, hey, can you show me, what's going on at the moment? What are the numbers telling us? Okay. And then you can make decisions, right? Based on how that's looking in economics, in finance, in all that analysis type of stuff there. So it definitely keeps it interesting.
Yeah, it's in a way, it's almost like a game or game theory, or almost like art, where that, like, once you learn more about it, there's so many intricacies of what gives it value. Like, for example, one kind of a genius thing that the guy inventor of Bitcoin, Satoshi, kind of put into it is that if there's a limited amount of Bitcoin, so we as early investors bought all this Bitcoin, but now we have this money, and in order for us to make it more valuable, we have to do something with it to actually make it more valuable, because if we sit on it, it doesn't do anything. So in a way, for us, there's actually an incentive to give people Bitcoin, teach people to use Bitcoin, implement Bitcoin, even spend their own Bitcoin in order to build a Bitcoin infrastructure. Because by doing that, as you know, network effects, the more people adopt it, the more valuable it becomes. The money we have left actually goes up in value. So like, you start out with, say, $10,000 investment, and then you spend like $3,000 to build some business or get some more people into it. All of a sudden, your $7,000 that you have left is now worth $20,000. So it's kind of like a self-feeding system that has an incentive built into it for us to make Bitcoin more valuable and to get more people to accept it. Because even if we're spending our own money to make it happen, we as a result become wealthier by doing it, kind of a deal, if you get the gist. And that's one of the very many kind of incentives that are built into Bitcoin that from very early on, almost 10 years ago, made me realize that Bitcoin is more, it's kind of like an inevitability with regards to where it's going to happen, just like the internet was inevitable too. And I might add, people think that, well, Bitcoin is too expensive right now. Maybe I'm going to wait for something newer like Bitcoin 2.0. But if you understand what open source network and platform is, you'd understand why that's not a rational idea. Because like, if you look at internet, where's internet 2.0? It never came, because any kind of ideas that you might want to implement to improve internet, you might as well just improve on internet itself. It's the same deal with Bitcoin. So any kind of ideas that we may come up to make Bitcoin better, it's not going to be in Bitcoin 2.0, it'll be in Bitcoin itself. And because it's something that is open to everybody, just like it was inevitable for Bitcoin to replace, so for internet to replace post mail and business transaction and everything else, it'll take time, but it's inevitable for Bitcoin to replace every other money, even if it's not through adoption, but simply through attrition, where older currencies just eventually fail due to mismanagement, and Bitcoin just remains because people keep improving and making it better and better.
Yeah, no, really great
And
points.
that's why I say it's a good investment. Even if you don't understand it, it's a good investment to hold, because eventually it's going to be adopted more and more, just because people like myself and many other millionaires and billionaires out there are pouring their Bitcoin wealth into developing this entire infrastructure.
Yeah, I really love that. And it's funny, like you mentioned, Bitcoin 2.0, which likely isn't going to happen. And if you look at history, it sort of has already shown that, because there was all these other coins that came out, right? Lithium and all these other things, right? But like, where are they now, right? They're not really happening much. Like, they're probably there a little bit, but no one's really talking about them anymore, right? It's Bitcoin. So
I mentioned that at the beginning. USB, unique selling proposition, I believe. Like, you ask, how do you investigate scams? It's the same way you do with all these other coins and businesses too. Like, you know, Ethereum came out. Well, Ethereum has maybe some benefits, but other coins like Litecoin or other coins that came out, they're new. Okay, so what is their unique selling proposition compared to Bitcoin? And you can evaluate, well, let's say Litecoin has transactions that settle at half the time that Bitcoin is. Okay, that's one benefit, and it's the only benefit, but is that enough of a benefit to overcome the other kind of what Bitcoin itself provides, like Bitcoin's network effects? Same way you evaluate other businesses, like, this is a new business and it has this unique selling proposition. Like, let's say I can sell for, I can deliver a package 3 hours faster than Amazon does. Okay, but do you invest money into this is because this is enough to actually overtake Amazon? Like, is it not? Usually not. So it's the same deal with other coins. Basically, the only coin that will be able to overtake Bitcoin will be a coin that is as much of an evolutionary change from Bitcoin as Bitcoin was from the old financial system, and also something that Bitcoin itself is not able to incorporate into itself, which will be hard to do because, as I mentioned, there's a lot of people with a lot of money in Bitcoin. I mean, we're talking billionaires who keep their money in Bitcoin exclusively, who have a massive incentive to, instead of just having all these billions of dollars they have in Bitcoin go away, they would rather spend some of that billions of dollars in Bitcoin and making Bitcoin work just as good as what that thing does.
Yeah.
And yes, there are actually people who hold millions and billions of dollars in Bitcoin because one of the things that Bitcoin lets you do is take your wealth wherever you go. So like if you have money in a bank account, it's stuck in the country. Major problem, like if you're in China, your money is stuck there. If you're in Russia, your money is stuck there. One way that Russia keeps businesses hostage is by holding their money there and saying, do what we tell you to, or we'll take your money. If your money is in Bitcoin, it can be on your phone, it can be on your hardware device, or, sorry, because Bitcoin, as I mentioned, is basically a contract that you need to sign, you can just remember the signature in your head, which could be like 12 words or a phrase. So you can keep your millions or billions in your head and you can travel the entire world and nobody knows that you have that money and nobody can stop you from having that money. And there's a new class of these millionaires and billionaires that are entirely in Bitcoin. You don't know where they live, you don't know where their money is because all their money is with them. And if a country passes some laws or some tax or some business thing, they just pick up and go and you don't know that they actually left and took like all their money with them. And some countries actually are recognizing this, especially in the Caribbean. So some countries are actually starting to pass laws. And like I mentioned in the beginning of our interview of seasteading, where these micronations are trying to experiment with different kinds of political things. Some countries, especially in the Caribbean islands, are starting to experiment with crypto-related laws where they know that all these wealthy, super wealthy people are out there, they're able to move their money wherever they want to, and they're trying to create laws that actually attract these people to come live in our country. We're not going to charge you taxes on like capital gains and other things because we know that you're going to be able to bring all this wealth with you and spend it here. So this is another kind of a, not really a business, but more of a political competition that Bitcoin has created that hasn't really existed before.
Very interesting. I liked a lot of those points there about, not being held hostage at any time or anything with your banks or financial system. And then, very interesting with countries allowing more because, taxes and, having liquidity, I guess, in money and being able to have that, being able to do what you want to do with things is a big thing in business and life, right? So, yeah.
We're talking about the Bitcoin doing this, and I mentioned that people FOMO and other people don't sell. Part of the, I guess, problem with Bitcoin is once you get very much into it, where most of your wealth is in it, like a lot of us, when Bitcoin crashed from 20, we couldn't sell because if we did sell, all of a sudden the financial system would have to know that we have this money. We'd have to pay massive taxes on all this money. We'd have to risk this money in the banking system. So like if you're small, you can buy and trade and come in and out of Bitcoin easily. But if you're big, and this probably won't make sense to most people, but staying inside Bitcoin is actually the least risky thing you can do compared to selling Bitcoin and moving into like dollars or something else. So a lot of people who own a lot of Bitcoin, like people look at Bitcoin, it's super volatile and they think of it as risky. A lot of the investors who have a lot of money in Bitcoin actually stay in Bitcoin because they're risk averse. They do not want to sell Bitcoin because selling Bitcoin is risky.
Yeah.
And it's another thing you realize after you kind of learn more about what Bitcoin is about as well.
Yeah, very awesome. And I guess like finally, what do you envision the future of Bitcoin being down the line?
Like asking somebody in 1990, what do you think is the future of internet is going to be, and asking them to predict 2020. I mean, as I said, one of the inevitabilities I expect in Bitcoin is that it will eventually take over money. One of the big issues that I know Bitcoin will create is a lot of volatility and issues in government money. There's one concept called hyper-Bitcoinization, which was coined by Daniel Kravitz. So you know what hyperinflation is, where money just crashes. And it does that because the value of money just loses value. Hyper-Bitcoinization is a concept where one money is simply so much better than the other money that it just replaces it. So the value doesn't disappear, just a replacement. And imagine if you were to go to a store, and at this point, you can spend Bitcoin just as easily as you can spend dollars. At this point, like let's say PayPal accepts it, you can use Visa. So both of them are just as easily usable. And you have no preference with regards to holding Bitcoin versus dollars with regards to utility. So now you have one money that is guaranteed to lose you 3% a year, another money that is guaranteed to make you some money a year. Same with a merchant. If he accepts your money, he knows that this money will be worth less at the end of the month, where he has to pay his suppliers, versus another money that'll pay you more. So at this point, you as a buyer and a merchant and a saver and a user, you want to buy the money that actually grows up in value. And also because of the costs involved with using Visa versus using direct payments for Bitcoin, a merchant might say, if you pay with Bitcoin, I'll give you like a 2% discount. So at this point, you have one money that is guaranteed to give you more, another money is guaranteed to give you less. So what do? You want to get rid of this bad money and you want to buy more of the strong money. So you sell that money and you buy the strong money. As you know, in the market, when you sell something and buy something else, the price of that crashes, the price of the other goes up. Other people see, okay, the price of this is crashing even more and the price of this is going up. So they also sell one and buy the other. And at that point, it creates a self-feeding loop where all of a sudden people are quickly trying to dump one thing and buy the other thing. And once that happens, which I don't know if that actually has ever happened in history, but once this happened, people will all of a sudden find dollars and other currencies very quickly hyperinflating or hyper-Bitcoinization or whatever. Not because they're being printed, but simply because one money is very quickly replacing the other money. And this will, I don't know when this will happen, but it'll happen without warning, and it'll probably take a month or two for this whole process to happen, just because the crash will be so sudden and so quick. And all of a sudden, the reserve currency, the dollar or whatever currency you're using in your country, will crash to nothing, and Bitcoin will become the main currency. But also as a result, all of the people who are still holding the old money will find themselves with nothing. All the people who have dollar-denominated lending contracts, like I bought a house and I own, let's say, $300,000 on this house, all of a sudden that $300,000 is worth nothing, so I can pay off that $300,000 with what is effectively like what would be worth like a $5 bill or something. So in the future, that will create a lot of turmoil, conflict. I mean, the whole reason that, well, not the whole. Historically, one of the big reasons that Hitler came to power during World War II was because there was hyperinflation, and people who understood money and banking were able to figure out to play this whole thing where they would buy a property and know that with hyperinflation happening, they'd be able to pay off this 30-year mortgage with like a 2 or 3 months paycheck. So all of a sudden they ended up with all this property, and it created a lot of conflict. And back then, due to older historical reasons, banks were actually, I'm trying to put this nicely, Jews were not allowed to have most jobs, but usury and banking were considered a sin. So Jews were allowed to actually have that. As a result, that's why a lot of Jews were involved in banking. And because they were doing this kind of stuff, it was easy to blame the Jews from like stealing all this property through inflation. And that kind of led to one of the things that led to Hitler. And then fast forward 70 years later, Greece and Italy are failing, and Germany is refusing to print euro because in German minds, inflation caused Hitler. So we know that these kind of big things will cause conflict and violence and kind of stuff like that. And because I believe that, or understand why Bitcoin is inevitable, and I understand that this hyper-Bitcoinization thing will happen, I know that eventually Bitcoin will have a lot of conflicts and issues in the future. But if you want to protect yourself, there's probably another reason to start investing and building in Bitcoin too, so you're not kind of caught holding the useless money that it just all of a sudden replaces. With the kind of spikes that it does, those are adoption spikes. In my unprofessional opinion, I believe we have maybe 2 more bubbles left, like this one that's happening right now and possibly another one afterwards, before, instead of it bubbling and falling, it just, like I mentioned with Twitter, where it just gets adoption. I think the one last bubble is not going to fall. It'll just stabilize and at that point become adopted. So, and that's another reason we don't sell, is because we don't know which one of these bubbles is a bubble and which one is never going to go down. So we sell and we end up getting screwed.
Yeah, awesome.
All right, I got a little political in that, but there was some weird history.
Yeah, no, I love those concepts and the way you sort of said that, and that's opened up people's eyes a lot more about what could happen with currencies and dollars, and compared to Bitcoin and politics and everything else. So that was really amazing. So thank you for your thoughts on the potential there. So we connected through our networks, where you're happy to help others in need and always provide your valuable opinion when asked about crypto investing or anything else along those lines. So I'm very grateful that we connected, and I look forward to working with you in the future as well, Michael.
Yeah, and if anybody wants to find me, it's very easy. Michael Tozoni. I'm somewhat of a public figure because I was working in a lot of public relations with businesses. So Google me, or my email is, you can probably figure out. You said @tozoni.com, just put my first name there and you got it.
I love it. Nice and easy. That's where you can find Michael. He's the man with crypto, with Bitcoin, with everything else, and he's definitely so much knowledge. So if you guys want to find him and learn from him and potentially work with him, however that works, definitely reach out to him. As you can see, there's huge amounts of value that we were given today, from a simple to a very relatively complex, to then also what's potential as well out there. So a really awesome show today, guys. So thank you everyone for watching and listening to this show, where we talk about everything on business growth. You can find me on Facebook, LinkedIn, and Instagram as Athin Cassiotis, or visit my website, athincassiotis.com. I completely agree with you, or do I? The only way you know is if you tune in next time. So until next time, remember that our business grows when we learn skills and take action using them in spite of fear. Have a great day.